So what we thought we'd do is I will just talk you through a selection of slides, really, to just try and cover all the key bases around credit and credit scores. And then it will leave plenty of time, the second half of the session, for you to ask questions to sort of build on any of the things that we've touched on, and maybe any of the things, some of the things we might not have thought about including. So that's the format of the session. So the key things I wanted to cover over the next 30 minutes or so, you'll see, hopefully you can see the slides highlighted here. So what's credit? Why does it matter? What do lenders, or how do lenders decide who gets credit? What's the credit report? What's on it? How do I start building up my credit report, which is a big challenge if, for example, you've only recently turned 18, so you've probably not had much opportunity to start building up any credit history so far. So we can give you some tips on that. What is a credit score? What is my credit score? What things do lenders like to see when you apply for credit? What should I think about before I apply for credit? So is there any prep that you can usefully do? And also I want to shine a light on some of the kind of top misunderstandings, because as I said at the top, there are lots of misconceptions about credit scores and credit decision making and stuff. So we'll look at some of the key ones just to make sure you're in the know, and then you can, you'll have a good foundation on which to build your great credit score going forwards. So let's get into it. So what is credit and why does it matter? Well, I mean, credit, the way we think about it is money, goods or services that you get and then pay back at a later date. So it can be something like a loan or a mortgage. It can be something like a car, or it can be a service like a television contract, mobile phone contract, something like that. But essentially, it's something that you're given and then you pay for at a later date. Credit is can be incredibly useful, incredibly powerful. It can help you spread the cost of large purchases into smaller, manageable chunks. It can help you kind of smooth mismatches between when you get your income and when you need to buy stuff. And it can also importantly help you invest in your future. So some key kind of examples of different sorts of credit accounts I've included on this slide. So a mortgage, which people use to buy a home, a personal loan that you might use to make another large purchase like a car. There's also specialist car finance products like PCPs and things like that. A credit card, which can use to help manage your spending across the month and then make an affordable payment at the end of the month. Installment accounts can be used for a whole range of things. For example, if you take out home insurance or car insurance, typically these days the provider will give the option of actually spreading the cost of that over the year rather than just paying in one chunk up front. There's usually a small charge for the privilege, but it obviously can add convenience for people, and so that's where we see typically installment accounts. If you've got a bank account, there's likely to be some sort of overdraft facility attached to that. That is also credit. So banks typically run a credit check on customers before they open current accounts. Mobile phone contracts, energy contract like gas and electricity if you're on a credit meter rather than one of those prepayment meters, TV, broadband, and even rent. Although actually in most cases people, tenants will pay for their monthly rent up front, there is still, of course, the opportunity to get into arrears if you start missing your rental payments. So I would include rent within this category. So there's some examples of credit and how you might use those credit products as you live your life, really. And some of those things that credit enables are obviously quite important moments in one's life. Now, obviously, credit is granted by the credit provider, normally a bank or lender, but sometimes, as I said, it can be a service provider as well. And so they will essentially decide when you apply for an account with them, whether or not you fit the profile of customer that they're happy to take on. So they will set some criteria based on their own business models and appetites and things like that. And one of the things they have to do is manage the risk that customers will kind of, take out credit and then not pay it back. So that's the risk of customers defaulting. No one's actually risk-free. If you speak to a debt advice charity, many of the people that contact them for help with unpayable debt have got into debt problems because of an unforeseen change in their circumstances. It's not necessarily about, sort of spending beyond your means necessarily, or not being responsible. So there's always some risk, and what lenders have to do is estimate how risky a customer you're likely to be, and decide whether or not they can take that risk by granting you credit. Now, what lenders typically do to help estimate or predict your riskiness, if you like, is they'll look at 3 or 4 sources of information. They'll check their own records if you've been a customer of theirs before. So if you apply to your bank for a loan or a credit card, they will already know quite a bit about you. So they'll take that into account. They'll also look at the information you give them on your application when you apply. Application form, typically this is online these days, not a paper form, but in there you will kind of declare information about your income, existing commitments, maybe if you've got student loans, something like that, information about your job, any dependents, that will be factored into their decision making. Next, they will typically look at your credit report. This is a potted history of your financial payments over the last 6 years, which is compiled by 3 main credit reference agencies in the UK, of which Experian, my employer, is one. And we'll shine a bit more light on credit reports very shortly. Now, some lenders will also look actually at your banking transactions, whether that's asking you to share your bank statements or asking you to consent through open banking to actually give them digital access to your banking transactions, to help them understand what we call your affordability, how much money you've got coming in and going out, whether you've got the bandwidth really to service another credit commitment. That really depends on the type of credit you're applying for. So if it's something like a mortgage, it's a massive commitment, you would expect the mortgage company to look very carefully at your finances, more so than something like a small loan or a credit card. Now, there's a lot of information there, and most lenders are processing lots of applications from customers. So to try and manage the time and to try and be objective and fair about this, most automate the process using something called credit scoring, which I'm sure you've all heard about. And it's a way of boiling all that information down into a 3-digit number that indicates how risky you are as a customer. It uses the past to predict the future. So if you've got a financial track record of managing payments on time, staying within your credit limits and so on, then the chances are you'll come out of the credit score calculation with a good score, and that will stand you in good stead to be granted what you're asking for. So a good credit score, or your credit score, will typically be used by the lender, firstly to decide whether or not to take you on as a customer. So they'll either say yes or no, or sometimes they might refer your application for a closer look if they think an underwriter, a person, needs to check something out that can't be scrutinized by the credit scoring software. Your score can also help determine how much they're prepared to lend to you. If, for example, you're applying for a credit card, they will use your score to help decide how much of a credit limit to grant you. And importantly, in many cases, what to charge you for credit. So if you're looking at, say, credit card or loan promotions, you'll often see the words subject to status or typical APR quoted. And that essentially is a clue to the fact that what they actually grant you will depend on your credit score. And typically, the people with the top credit scores incur the lowest fees. So there's an incentive really to get to know your credit score, how credit scoring works, and to try and do everything you can to build a good track record, get a high score, and therefore get access to cheap credit, to good credit offers. And as I said, what credit scoring essentially does is use the past to predict the future. And that's why it's important to build a credit history and for it to tell a good story. Hope that makes sense. So I mentioned your credit report. This is the information that the credit reference agencies like Experian, there are a few of us, Experian, Equifax and TransUnion, compile and make available to lenders when you apply for credit to support your application. The information you'll typically find on a credit report, you'll see listed on the left-hand side, electoral roll information. And you might think, well, why is that on there? Well, it is obviously information compiled to help elections, to enable people to vote. But it's actually a good proxy for checking your name and address, and also how long you've lived at your address or addresses if you've moved around a bit of due diligence for the lender to try and make sure, for example, that when you're applying for credit, you're not missing off an address where maybe you've got into financial difficulties. So we include the electoral roll. Credit accounts, all those different types of credit we looked at before. The vast majority of organisations that provide those accounts and services actually share high-level information about what credit you have and how you're managing it with the main credit reference agencies. And that information reflects those accounts that have been operated in the last 6 years. So credit reports don't go back forever. We're only really interested in your relatively recent financial track record because, as I say, we're in the business of predicting the future. And if you go back too far in the past, it becomes less and less relevant. We also add to your credit report any information that we find on public financial records relevant to your financial standing, things like court judgments, CCJs in England and Wales, other names in different parts of the UK, and in its various types of insolvency, like bankruptcies and IVAs and debt relief orders. They're all actually, of course, a sign of financial problems. So ideally, you don't want to have any of those records on your report. We also include previous credit applications. So every time a credit check takes place and your credit report with us is accessed, we record a small footprint, and that helps a new prospective lender see how many things you've been applying for recently, and also gives you the opportunity to check yourself who's been looking at your data. There's a system for sharing flags about fraud that relates to both the genuine person maybe slightly massaging information on their application to try and make themselves look more attractive than they are, typically something like inflating how much you earn. Please always tell the truth on applications for credit, because lenders employ quite intelligent systems to spot obvious anomalies. And also fraud can take the form of third-party identity fraud. So if someone's applying for credit in your name, then again, if that's detected, a flag can be added to help protect your identity going forwards. Your credit report can include information that you add yourself. The main way that this happens is a notice of correction. So if you wanted to add a bit more information to explain something on your report, maybe you'd missed a payment in the past for a good reason, like you went into hospital for an operation, you can send us a notice of correction and we'll actually append it to your credit report. And then any lender you apply to in the future will be able to see that. And lastly, there's a small handful of things that we add to your report simply to help piece together the right information for you. Financial links are links between different people. Your report will only include your financial data, but you can link up your report with someone else, typically a partner that you live with at the same address, if you've taken out joint credit. And that means that in the future, if you apply for credit, the lender can, if they wish, look at the other person's credit report as well, because you've become a financial unit. And on your credit report, you'll see a list of the names of anyone you're linked to financially, although you won't actually see their data. And also any previous names or previous addresses that we've got a record you've been linked to, again, just to make sure that lenders are looking at all the relevant information about you. What you won't find on credit reports, you'll see listed there on slide on the right-hand side. So it doesn't actually show the outcome of any applications you've made. You might be surprised about that because a common misunderstanding is that if you refused credit, that puts a big black mark on your credit report. That's simply not true. All we know is that you've applied. So credit refusal actually doesn't appear on a credit report. Neither do criminal convictions, nothing about protected characteristics like ethnicity or sexuality. I've already said you don't see financial information about other people, although if you're linked to someone, your lenders could potentially look at their data. At the moment, we don't get information from the buy now, pay later providers, the likes of Klarna, for example, although that is a work in progress, and we would expect to see that information being shared with the main credit reference agencies very soon. And certainly if you take out buy now, pay later borrowing and don't pay it back, and it ends up in the hands of, for example, a debt collector, then that becomes more likely that the information will hit your credit report. Your report also does not include information about your income, information about council tax payments, payments to streaming services like Netflix and Spotify, and also any payments you make to savings accounts, ISAs, things like that. I put those last four in italics because actually Experian does have a service to enable you to add those four types of information into your credit report if you would like to, and I'll come on to that in a bit more detail a little later. So that's what is and isn't included on your credit report. So most young people, you start out with no credit history at all, of course. Most lenders will only provide accounts to people once they hit the age of 18, sometimes a bit younger if if a parent, for example, guarantees a bank account or something like that. But 18 is the normal age where people suddenly start to build some information with the credit reference agencies, and we are able to compile a credit report for you. In terms of the things, if you wanted a checklist of how to actually, in a relatively trouble-free way, build up a credit profile, I've listed out a bit of a shopping list here for you. So firstly, register to vote. As I said, it not only enables you to take part in the democratic process, but we add the information to your credit report. It's a record of your name and address and periods of residency, and lenders do check that. And not being registered to vote can cause problems when you apply for credit or other services. And it kind of forms a bit of a hook to build your credit report around. So do make sure you're registered to vote. And if you change address, then re-register with the new council as soon as you can. I mentioned current accounts are routinely shared with credit reference agencies and included on your credit report. So once you've got a bank account, student bank account, any sort of bank account, you should expect that to pop up on your credit report. And then basically on a monthly basis, a record of basically how you operate it. Now, as long as you don't rack up loads and loads of debt on that, and importantly, as long as you stay within your any borrowing limit, any overdraft limit, and you don't have payments bouncing on a regular basis, then that actually should form a positive record and should help you start to build a healthy credit score. Many providers of regular household bills and services, and we've touched on a few of these before, phone contracts, energy contracts, TV, broadband, do actually share information, account information with the credit reference agencies as well. So if you can get your name on some of those bills, then again, you should hopefully see some of those records populate your credit report and help you, assuming you make those payments on time, and always use direct debits where you can, because it kind of helps you avoid forgetting to make payments from time to time. Then those regular payments, again, can start to contribute to a positive financial track record that should help you build a healthy credit score. Landlords don't routinely register rent payments with the credit reference agencies, but we have partnered with a number of third-party organisations, for example, Canopy and Credit Ladder, whereby if you sign up to their services and their basic services are free, then you can actually give them permission to report your rent payments to one or more credit reference agency. And that, again, can be another way to start adding to your financial track record. You probably won't be surprised to see credit cards included in my tips on how to build a credit history. Credit cards can be a really powerful way to build a great credit score. But of course, they don't come without risk because it's not, generally speaking, a cheap way to borrow money, and certainly not a great way to build up long-term debt. Can be quite expensive. So I would only do this if you can be disciplined and you can trust yourself not to get into financial problems with a credit card. But if you do take one out and you use it maybe to buy a bit of shopping once a month, and you set up the direct debit to clear the payment or the balance in full at the end of each month, then it can be a great way to start establishing a financial track record. And actually a really well-run credit card can boost your Experian score, which runs on a scale of 0 to 999, by 200 points. So credit cards are a really great opportunity to build a good credit score. But of course, if you get into trouble with a credit card, if you build unmanageable debt, if you start missing payments, then the opposite will be true, and that can actually damage your credit score. So a word of warning with credit cards, treat them carefully. And the last thing I'll mention here is the service I briefly referenced earlier around the opportunity for you to actually add in extra information to your Experian credit report. It's called Experian Boost. We launched it, I think, just over a year ago. Uses something called Open Banking, which is basically a software and a framework that enables you to give authorized organizations access to certain information from your bank account to give you some sort of service or benefit or advantage. This service specifically helps boost your credit score by looking for the 4 things that I've listed just there. Information about your income and your kind of current account turnover, so how much money you've got coming in each month compared to how much money you've got going out. Regular payments to digital streaming services like Amazon Prime, Netflix, Spotify, and so on. Regular payments to council tax, and regular payments to savings. So if you're making those regular payments from your current account, Experian Boost can help actually bring that information into your credit report calculation. It's free. It can only make your credit score go up. The maximum boost we can give people is about 101 points. So it can be quite significant. So really, there's no reason not to give that a try, especially if your credit score could do with a little bit of a lift. So that's the checklist on how to build a credit report from scratch. The next question is, what is my credit score? The first thing to say is there is no single credit score. There's no universal credit score. There are a number of organizations that calculate credit scores. Certainly the 3 main credit reference agencies do, and many lenders calculate their own scores. Some will use credit reference agency scores, some will calculate the scores themselves. The thing to know is they all have different formula. They all express their scores on different scales, and sometimes the information they use will differ. So the actual number they generate won't necessarily be comparable to the numbers other credit score calculators generate. So I wouldn't focus, specifically on the exact number. It's more the story it tells. And actually, whoever calculates your credit score, as long as they don't have something that no one else knows about, the chances are it's going to tell a very similar story, and essentially expresses how financially reliable you are based on your track record. As I said before, Experian scores run on a scale of 0 to 999. The higher the score, the lower the risk. So if you've got a high score and you apply for credit, the chances are you're going to be accepted. And because, as I said before, lenders use this number not only to say yes or no, but sometimes to decide what to give customers, the chances are you'll be granted a healthy credit limit and a low interest rate, which is all good news. We break the Experian credit score down into 5 different bands, ranging from very poor to excellent. We give everyone access to a free account at Experian, so you can sign up and actually track your Experian credit score for free, and it's updated on a monthly basis. So that's a great way really to get to know your credit score, and alongside the score, we'll give you tips on the sorts of things you might be able to do to actually improve it if there is room for improvement.
Sir, hi. People are putting questions in the chat. Are you going to answer this now or wait until the end?
We'll come back to that at the end if that's okay. Just got a few slides and then we'll take all the questions, I think.
Okay.
Yeah, I'll be going through all of the questions at the end to make sure we get through them all.
Okay. You'll see around the credit score dial there are some typical ways that you can actually grow and boost your credit score. They're sort of examined in a bit more detail on this slide. The key things really, you want to try to make sure that your credit history is saying is, I am who I say I am. You're on the electoral register. There's some, some positive, mature credit history and a mix of different accounts on your credit report to show a new lender you can be trusted to manage credit, pay it back on time, stick within your credit limits. That you don't owe lots of money to lots of different organizations so that you're not too heavily indebted. And any credit cards, one of the things lenders look at is what we call utilization. So that's what's your balance at the end of the month compared to your credit limit. And if you can keep that as low as possible, ideally below 30%. So if your credit limit's £1,000, then try not to build up a balance of more than 300. Then you'll win extra points on most credit score calculations. Obviously, you don't want to collect any negative, any adverse things that we touched on before, like judgments and defaults. You don't want to appear overly needy, so try not to apply for too many things, certainly not within a short space of time. And you'll see, based on the Experian credit score, some examples on the right-hand side there of just how many points you can win and lose, depending on your financial behaviour there. And I think Danielle, we can share these slides with people, so you don't have to scribble this down, and you can take that away and have a look at that a bit later in more detail. But it goes without saying, if you do the positive things that we've touched on, you're likely to win extra points for your credit score. Whereas, if you start to exhibit some of the negative behaviour, then your credit score will obviously suffer a bit. In terms of what you need to know before you apply for credit, as I say, I've just underlined the fact that where you can, try and limit how often you actually ask for credit. Because when you say, will you lend me money or will you open me an account for me, that hits your credit report with what we call a hard search. Those searches are visible to lenders, and they can actually influence your score and actually cause your score to drop a bit. And certainly if you start applying for lots of things, you can cause your score to drop quite a lot. So think very carefully before you actually ask that question. Do your homework first. I mean, start out by sort of, asking yourself, do I need it? Can I afford it? And if the answer's yes, then the first place really to start, if you haven't done already, is to check your credit score. As I say, you can check your credit score with Experian and the other agencies for free, just to make sure there aren't any problems. And if there is an issue, then take some time to sort that out before you invite a lender to run a credit score on you. And then to make sure you're getting the best deals suited to your circumstances, use comparison and eligibility checking sites to shop around and find the best deals for you. You'll find one on the Experian site. Lots of other services provide similar services, lots of other sites. So use those to try and avoid applying for things you're not likely to be accepted for, because that can help you avoid collecting hard searches that can damage your credit score. And if you do get turned down, then try and find out why before you apply somewhere else, because it might be something you need to sort out. And if you keep applying to other lenders before you sort it out, you can actually make the situation worse. And there is a credit refusal pathfinder tool on the Experian website to give you some guidance on tackling a credit refusal. And it gives you, for example, the main reasons lenders say no, and helps you work out your best next steps. And as I mentioned before, if you are checking your score on the Experian site, do check out Experian Boost. It can be a great way, especially when you're starting off on your credit journey, to start adding extra relevant information into your Experian credit score calculation. My last slide before we move into questions just shines a light on some of the top misunderstandings, because I really want to make sure, by the end of this session, you know the facts on some of these key issues, because they are things that quite a lot of people get wrong. So firstly, there's no credit blacklist. The information we hold is actually largely positive. Most people manage and pay their credit on time and have good credit scores. Obviously, if you start missing payments and you build up debt, that's not going to help you. But there's certainly no blacklist, because it's always down to the lender you apply to as to what your data means to them. Credit checks are on you and not your address, so you can't be affected by whatever the previous occupants got up to. Other people only come into your credit score calculation if, as I've explained, you link up your credit report with someone else, typically a partner that you live with and share credit with. Otherwise, even if it's family that you live at the same address with, as long as you've not linked your credit up together, then their information will simply be invisible to your lenders. Checking your credit score does not damage it. It does leave a footprint that you can see, but it's a soft footprint. It's not one of those hard footprints that lenders see that can hit your credit score. So you can check your own score, check your own report as often as you like with no implication. We've already touched on the fact you don't have a single credit score. There's no universal credit score, but understand what credit scoring does and some of the key things that you can do to build a good one. Another common misunderstanding is that the credit reference agencies actually decide who gets credit, which is not true. It's always the lender. But of course, the likes of Experian and the other agencies do provide information into the process, and we do help lenders decide, but it's always the lender's decision. And if you're refused, that's where you need to go to find out why, because only the lender will know. And again, one we've already touched on, being refused credit does not damage your credit score. It's simply not recorded on your credit report, just the fact you applied. But as I've already said, if you are making lots of applications, those records can start to damage your credit score. So try and limit your applications. And if you've got a few things to apply for, if you can, just space them out a bit so you don't start to look like someone who's a bit desperate for credit, which could put a lender off. Right. So that's my credit score 101. We've been through those 8 questions. I hope that's started to build your knowledge about credit scores, maybe fill in some gaps in the things that you already knew. I'm very happy now, Danielle and team, to take any questions.
Yeah, what I think we'll do, just because of the number of questions, to make sure we get through them, is I'll just go through them in the chat, James, and I'll ask you the questions as they were kind of put in there, if that's okay.
Brilliant.
Because we had one quite early on, which was saying, why does being on the electoral register impact your score?
Okay. Well, it's a record of your identity, if you like. It helps the lender confirm your name and address. And it's also a sign of stability. And lenders like stability. They like reliable. They like predictable. And when we run credit score calculations and we model credit risk, we find that someone who is registered to vote at their current address is simply more likely to make their payments on time. And so if you registered to vote and checked your Experian credit score afterwards, once that information came through and was added to your credit report, you would see your Experian credit score increase by about 50 points. So it is relevant to your credit score, and actually can give your score a little bit of a boost.
Thanks, James. We'll keep moving on. I'm not sure if you will know this one, but somebody said, what happens to the debt, to people's debt when they die? I don't know if that is linked in at all with kind of credit reports or anything.
It's more of a general sort of financial question, but I mean, we only compile credit reports on living people. But if someone passes away and leaves some debts behind, then whoever looks after their finances and deals with their estate, should pay off any debts if there are any assets. Should clear the debts. If there isn't enough money left to clear the debts, then the debts simply get written off. other people do not become responsible for your debts when you die, unless they're joint debts, of course. So, if you had a joint loan, then the other account holder is equally liable for the debt, so they would pick up that in their own right. But generally speaking, individual debts are written off when people die, unless there's money in your estate to cover that off.
Thanks, James. That's well. There's another one. Are there any companies which offer credit cards or overdrafts specifically to students and graduates who might not have a strong financial history but want to build their credit score?
Well, I think all the major banks, for a start, have a range of products aimed at students and graduates. It's always worth shopping around because some of them will come with incentives and benefits. Things like free rail cards, maybe different overdraft limits and things like that. So it's worth looking at those. And you would expect banks to expect, young customers to not have much of a financial track record. So to not be particularly worried about finding that when they run a credit check. I have, however, still seen some examples of where, kind of 18-year-olds have been refused by a bank because they had a low credit score. And the only thing we could see was the fact that they didn't really have very much track record. But, that's kind of to be expected. So, if that happened to you, I would go back to the bank and challenge that decision. What I would say just generally is do use those comparison and eligibility services, because regardless of your circumstances, it's a great way to match your credit profile, your credit score to lenders and to products that you're likely to be accepted for. So it can really help you kind of hone in on the right products for your situation, and then you can obviously filter and search between the different benefits that appeal to you.
Thank you. The next one, is a mental health diagnosis considered by a lender?
That's a great question. I'm actually just reading reports at the moment on money and mental health. It's not something you find on your credit report. But obviously, if you're applying for credit and you have a mental health issue, it may be in your interest to declare that to the lender if you want them to take that into consideration in the way that they interact with you and support you and so on. But in terms of their initial decision-making process about whether or not they want to take you on as a customer and grant you credit and so on, it should not be a factor. Those protected characteristics, like mental health and gender and age and so on, should not really be a factor unless there is a concrete, justifiable reason for that affecting the outcome. It's more around helping make sure the lender understands your circumstances and is best able to kind of fulfill their obligations to treat customers fairly and in their best interests. So and certainly if you're looking at your kind of existing relationships with banks and other lenders, if you develop a mental health issue that has an impact on, for example, how you like to interact with your organizations, or how you're able to manage any financial commitment you have, I would recommend sharing that information with them, because there is an obligation under the Equality Act for organisations to take that into consideration and make reasonable adjustments to help make sure they're supporting you based on your circumstances.
Thank you. We've got some more. Will applying for a credit card now affect my ability to get a mortgage in the next few months?
Oh, that's a good question. We did look at mortgages in particular, but there is some guidance on the Experian website on the sorts of things you should be thinking about if you're applying for a mortgage in the not too distant future. And I would say, if you can avoid it, try not to apply for any other credit at all in the weeks and months leading up to a mortgage application, because with a mortgage, you're normally talking about quite a sizable amount of money that you're being lent. And so a mortgage lender will probably do, the strictest due diligence on your financial situation. And if they look at your credit report and see that you've taken out other debt in the recent past, that might worry them in terms of your current financial situation. So if you can, I would avoid taking out a credit card if you're planning to apply for a mortgage quite soon. If, however, it's more than 6 months into the future and your credit history could do with strengthening a little bit, then actually a credit card can be a really useful thing to take out, because, as I said before, a well-run credit card that you've had for more than 6 months can actually start to really establish a good financial track record, as long as you're not, building lots of debt on it. So it really depends on where you are in relation to when that mortgage application's going to take place.
Thank you. Oh, we've got one here. Another student told me that an employer is insisting on a credit check. Is this common?
That's a good question. I'd say not particularly common. Depends on what the job is and what sector the employer's in. I mean, if you're applying for a job with a bank, for example, where you're going to be helping look after other people's finances, then I think I would expect the bank, as part of their screening process, to check, with your permission, your own financial track record. If you're handling other people's money, for example, it depends on as I say, the type of job you're applying for. But you would always be put in a position to, grant permission for a credit check to take place in that sort of circumstance. But those sorts of checks should always be proportionate and relevant to the role you're applying for. So, if you're applying for a job cleaning the restaurant in McDonald's, for example, I'd be incredibly surprised if they wanted to get your permission to delve in your credit report, because it's really not relevant, is it?
No, I agree. I don't think I've ever been asked that as for any of the jobs I've had, but like you say, wouldn't have been relevant. There was a few questions on credit cards, which I think to some degree we've covered. Somebody asked about having a fee on a credit card, but I'm not sure that you would want to address that here, James.
A fee, like a monthly fee?
So is there a fee for having a credit card?
No, not usually, no. But, a credit card can incur fees and charges and so on. So if you spend money on a credit card and then don't pay the balance off in full at the end of the month, the lender will typically charge interest at around 20-25% APR. And if you continue to build up medium to long term debt on a card, it can become quite expensive.
Can you
don't normally have like a monthly membership fee or something like that. I think there are charge cards that sometimes come with a monthly fee. The only other regular way that fees come into it is if you start to see penalties levied for misdemeanors, like missing your monthly payment, for example, or straying over your agreed credit limit.
Thank you. There was just one question further down, but I'll do it now just because you mentioned APR again. Can you just explain what APR is, please? APR
stands for annual percentage rate, and although it's quite a complicated calculation under the bonnet, if you like, it essentially gives you an indication of how much you'll be charged over a year for a particular amount of borrowing. So, simplistically, if you borrowed £100 and the APR was 10%, then you'd be expected to pay back £110. In reality, it's more complicated. Lenders usually pro rata or divide up the APR charges on a monthly basis. So you then have the thing whereby you've got compounding of those interest charges, but essentially that it gives you an indication as to how much extra you're going to have to pay back based on how much you're borrowing. So generally speaking, the lower the APR, the cheaper the credit's going to be for you. And if you've got a great credit score, then you're putting yourself in a good position to actually be granted the best APRs.
I'll just answer these. I feel like we're kind of going into similar ground, but just kind of want people to feel their questions have been answered. Would you still be able to get a mortgage in the future if you never took out a credit card and only have a debit card?
Yes, I mean, you don't need a credit card really to get a good or even excellent credit score, as long as you've got a mix of other accounts that have been or are being managed well, and you're on the electoral register, and you've not been applying for lots of credit recently, and you've not collected any of those those adverse records like CCJs and so on. Then you should be able to get a great credit score and be accepted for things like mortgages in the future. I mean, as I explained, credit cards can gain you a lot of points on the credit score calculation, as long as you manage the credit card well. But don't think you have to get a credit card to get a great credit score, because you don't.
Thank you. This is quite a specific example, and I don't know if you'll be able to answer, but I will give it a go. So somebody who's an expat is married to a British person. Is there anything that can be done to not have the ability to vote or register to vote impacting on their credit scores? And they said, as an immigrant, I do vote in the USA from abroad. How can I not have that impacted by not being able to do it here?
Right. Okay. So, I mean, if you are eligible to register to vote, I would encourage you to do so. And actually, the criteria include, you might be surprised, people from a number of other countries outside of the UK. So Irish citizens of the Commonwealth can typically register to vote. And I think pre-Brexit, European citizens as well. But if you're simply not eligible to register to vote, then what I would advise is to get a copy of your credit report from all three main credit reference agencies, Experian, Equifax, and TransUnion. And then get back in touch and ask them to put a notice of correction on the credit report that they hold for you, explaining that you're not eligible to register to vote, and that you can provide, upon request, other proof of name and address. That will simply go in there in place of the electoral register, and might help ease a lender's concern when they run a credit check and see that you're not registered.
Thank you. That was really useful answer. We've got something here where someone said, why does paying car insurance monthly boost your score? It is usually more expensive to pay monthly than annually.
Yes, I did touch on this earlier. I mentioned that if you take insurance out, you're often given the option to spread the cost over 12 monthly payments through an instalment plan. If you do that, then basically you're taking out credit. You're taking out an instalment loan, and that will be registered on your credit report. And assuming you meet those 12 monthly payments as you agree to, then you might see a small credit score benefit from that. But I would not base your decision over whether or not to spread the cost of insurance versus paying it up front on that small potential credit score gain, because as the questioner rightly says, it's a more expensive way to pay for insurance. It can be convenient if that works for you, but as a kind of an avid money saver myself, if I can pay for something up front and get it cheaper, I will generally do that, irrespective of a potential credit score boost further down the line. It won't be a big boost. I think it's typically about 20 points or something on the Experian credit score for a well-maintained instalment plan. So as I say, I wouldn't make that decision purely based on a small credit score increase, because it can cost a bit of money.
Thank you. I know that you touched on different people having kind of the different scoring systems, but somebody did say their credit score in Experian is 950 out of 999, but 450 out of 1,000 on Clear Score. Would that, they've said, why? Is that just the scoring system, or would that be indicative maybe of something else?
That's interesting. I think, I said before that the scales and the scores aren't directly comparable, but alongside the number, you should get an indication of what that means. A score of 950 on Experian, I think, is very good. So I would have a look and see what that different score on Clear Score is described as. If it's not described as very good, if it's described as fair, for example, then I think that warrants a bit of investigation, because that maybe suggests that Clear Score actually use Equifax scores, so it maybe suggests there's something on your Equifax report, or maybe just something to do with the way that service has been set up, that's causing you to get a lower credit score than the Experian credit score. Just one thing to quickly say on that, in terms of, I highlighted one of the reasons sometimes you can get different scores is because the data can be different. All of the account information you find on your credit reports is shared voluntarily by banks and lenders. They don't have to share that data with us. Most share with all three agencies. Some, however, only share with one or two. And if you got into financial difficulties with a lender who only shares with one or two, then some of the credit reference agencies won't be aware of those difficulties. So that can sometimes explain differences, but that is quite unusual.
Thank you. Another question, we've got some more. If everybody's still good, I'd rather get through them all if we can. Should you reduce your credit limit if you can?
On a credit card, if you don't trust yourself with the credit limit you've been granted, and you're a bit worried that you're just going to spend it all, then yes. However, having a large credit limit and a low balance on a credit card will actually win you quite a lot of points on a credit score calculation, because it shows that you trust yourself with that credit and that you're not particularly reliant upon it. And that's, those are good things for lenders to see when they check your credit report. So, if you've been with a lender for several years and you've managed your account responsibly, there's a good chance they will have increased or offered to increase your credit limit on a number of occasions. And I would sort of generally say, as long as you're happy and you trust yourself not to abuse that, then I would accept those credit limit increases, because that can really help boost your credit score. As long as I said, you try and keep those balances low each month, certainly below 50%, if you can below 30%. A balance on a credit card below 30% on an Experian credit score calculation will actually gain you 90 points. So that's the opportunity to boost your credit score. But of course, you need to keep an eye on financial responsibility as well.
Thank you. Somebody's asked, does your rent impact your credit score?
We can add rent payments into your credit report. It's not automatic. If you engage with one of those platforms that I referenced earlier on in the presentation, Credit Ladder, Canopy, there are a few others, I think Lockbox as well. You need to kind of set up a membership with them, and then that can add or share your rent payments with one or more credit reference agency. Once that happens, then that information becomes part of your credit report, is provided to lenders in the future, and then can hopefully help evidence your financial reliability.
Thank you. Somebody also wanted to ask, how does your credit score link up with your partner?
So people aren't automatically linked by marriage or kissing or holding hands or anything like that. But if you apply for or take out credit together, then that creates a financial link with the credit reference agencies. So something like, a joint loan, joint mortgage, a joint current account. You might have a joint current account, checking account to pay, household bills from and things like that. Anything like that will actually create a link between your credit report and the other person's credit report. And that means in the future, when either of you applies for credit, the lender can actually look at the other person's credit history too. So be aware of that. Money troubles are a frequent cause of relationship trouble. So I would encourage people to be kind of open with their partner about, their financial behaviour and any debts and things like that. So there aren't any nasty surprises further down the line. It is possible to live together as a couple and not link up your credit if you keep everything in your own names and one person pays for one thing, one person pays for another. That's absolutely fine. But I think the reality is many people do take out joint credit, especially if you buy a house and get a joint mortgage, and that will link up your credit reports in the future.
Thank you. We've got a couple now which are kind of non-UK. So the first one, somebody said, as an international student, does it even matter that I build my credit if I do not plan to stay in the UK? Well, only while you're here, I guess, because one thing to know is that credit reports don't travel overseas. They're not exchanged across borders. So, if you move from the UK, maybe back to wherever you came from before, the US or France or Spain, you will essentially have to start from scratch if you've been away for a number of years. Saying that, what if I were in that situation and I'd built up some credit history in the UK, I would actually be, just before leaving, pull copies of my credit report from one or more agency, print it off and take it with me, because it can help you establish a credit history in a new country if you have the ability to share that with the lender you're applying to, and give them comfort that you are a trustworthy customer. But the data itself won't be accessible to lenders overseas. So it really depends on how you approach that. Certainly, if you're going to be in the UK for a number of years, it's not just about borrowing money as we've looked at it. Credit checking, it takes place linked to a number of different types of services and accounts and so on. So it's it's a good habit to get into to build some positive track record, certainly while you're in the UK. Thank you. And kind of just on from that, we've got one saying, does Brexit and my European nationality affect my credit? And really added to that would be, would getting a dual nationality help with the credit score?
Nationalities don't really come into it. So it's not really a thing. I mean, I think the only obvious impact from Brexit here is the ability to register to vote. Because I think before Brexit, or certainly before the impact of Brexit took effect, EU citizens could vote in the UK, and vice versa. And certainly, as we've looked at, within the UK, registering to vote goes on your credit report, helps your credit applications, can boost your credit score a little bit. If EU citizens no longer have the ability to do that, then obviously that denies them a kind of a small opportunity to build a credit score and to help smooth applying for credit. But outside of that, I'm struggling to think of any obvious implications.
Thank you. I think we've got just really a couple more. There's two that I'm kind of going to put together, because again is about credit cards, but saying, is having a credit card, if you get cash back and rewards, worth it to take one out? But also, actually, somebody said, does simply taking out money with a credit card work as well as just going to the shop once a month?
Well, a couple of things there. So if you can just shop with a credit card, it's a great way of building up credit history and kind of winning quite a lot of points on those credit score calculations, as long as you make at least the minimum payment each month and you stick within your credit limit and try and keep that balance as low as possible. And I've already said as well, credit cards aren't a great way to borrow money more than short term, because they're kind of relatively expensive, 20-25% APR. But it is a good way to evidence, you can be relied upon to borrow money and pay it back. If you get a credit card and set up the direct debit to clear the balance in full at the end of each month and then use it, for a bit of regular spending, then that, for me, that's the ideal way to go. There are benefits actually to buying things on credit cards as well that I'm sure many of you are aware of. I think the questioner referenced, kind of loyalty rewards. So some credit cards give you air miles or nectar points or even cashback. So it's kind of, you can see that as free money potentially. A lot of people, manage to harvest some quite decent rewards by putting as much of their regular spending through a credit card and then paying it off in full and paying no interest as they can. In relation to withdrawing cash on a credit card from an ATM, just a word of warning, that is noted specifically on your credit report. And if you were doing that on a regular basis, a lender might see that as a sign of financial stress or financial problems. So I wouldn't try to, I try and avoid doing that on a regular basis. Occasionally, it shouldn't be a problem. I mean, I've got a credit card actually I use when I'm on holiday for cash withdrawals because it doesn't have any fees, and I don't hesitate to use that from time to time when I do, in times when it was easy to go to another country. And hopefully again it will be soon. But it's not an issue to do that occasionally. But if you're doing that on a regular basis, as I say, it might raise a lender's attention and cause them a bit of concern. And also, cash withdrawals on credit cards actually start to attract interest, usually almost immediately. So it's also not a particularly cheap way to get hold of cash.
Right, this is going to be the last one, James, because thank you ever so much for your time, but this will be the last one. Was just saying about that, saying if we were talking about kind of you saying taking credit limits if you increases if you trust yourself, how long should you wait before requesting an increase in a credit limit? For example, will it negatively affect if you request an increase too early?
Oh, that's a good question. So if you ask for extended credit, that is often treated like a credit application, and they will run a credit check. So you might end up damaging your credit score a little bit by collecting another hard search. So I would warn against that. I think. I mean, lenders are very keen to kind of grow their share of your wallet, if you like. So if you build a good relationship with them and they see you as a reliable customer, the chances are they will get in touch and offer you the extended credit limit. And because it's them offering it as opposed to you asking for it, that won't incur a hard credit check. I mean, obviously, if you've got a specific need and for a higher credit limit, then that you might want to have that conversation with the lender. But I kind of approach that with caution. If you've got, by the way, a balance on a credit card and you're looking to transfer it to another credit card and take advantage of a 0% promotion, and they are quite popular. And certainly, if you go on the comparison sites, you can just filter and look for what they call balance transfer credit card deals. One of the things you might want to try and check is that the card that you eventually apply for, that the provider is going to give you enough of a credit limit to transfer across whatever balance you want to transfer. And some sites, including Experian, can actually give you a heads up on that before you apply, to save you applying for a credit card that's going to come back and say, congratulations, you've been accepted. Your new credit limit is £250 and you actually wanted to transfer £1,000. So again, just a heads up to use those comparison and eligibility services to make sure you're applying for something you're going to get and that you're going to like what you get.